Good morning, traders. It is Friday, August the 17th. Taking a look at the charts this morning. Here we've got the US dollar index, the 4-hour chart. We've had a nice steady pullback in the US dollar as it's been consolidating, and overall we're really trading at this key kind of pivot level that we reached yesterday, and we ended up seeing prices sell back down. Now we did have this falling trend line, which we did break out of yesterday, sorry, the last couple days, and we pushed up, just pierced to a new high, just breaking this high from a couple weeks ago, and we just pierced it, and then we got some selling back into the market. Now you can see this key pivot level where we've had a consolidation, a pivot low, big consolidation, a pivot high, and now we're stuck under that resistance level. Overall, this line here kind of is showing that there could be a base forming in the US dollar index, and it may trade sideways here for a little bit, and when it breaks this 82.80 level and starts to work its way higher, then we would see more or less a shift in momentum in the dollar to the upside. But right now it is still down slash sideways, and it really needs to break above these two previous pivot highs before we can start to see upward momentum pick up and likely equities start to pull back. Now looking at the short-term price action, we had a strong move down yesterday, and we've got a little bit of a bear flag forming. I wouldn't be surprised if we see the US dollar index slide down to around the 82 level, possibly just pierce this previous pivot low, which the US dollar has a tendency of doing, is piercing these lows just by even a couple ticks, but it does it over and over again. And again, overall what I'm looking at here is a nice 1, 2, 3, 4, 5 wave correction, and from there we could see a pretty strong move happen in the US dollar index, because overall the daily and weekly chart of the US dollar index is still holding up very strong. Here's, you can see that the range, we're up near the upper end of the range, but still have a long ways to go before we get up there. If we draw a simple trend line, we do have some room for the US dollar to consolidate a bit more, trade sideways, and from there we could eventually see it make another run up into resistance, which would trigger a sell-off in the equities market. And that falls in line with September, October, just around the corner. Technically they're a seasonal weak time for equities, and if we look at that going forward, again this is a weekly chart, look forward going another 2 to 4 weeks, we could see the market chop around and form a little bit of a topping pattern in the next 2 to 4 weeks, and then from there we could see the dollar start to rally, and we'll see equities actually roll over and pick up speed to the downside. And of course this would go right into the elections, at which time I think if we do see this rally here and the elections come around, then I think we'll probably see the US dollar pull back down, and we'll probably see equities rally because there will be results for the election. Looking forward at the energy sector, here's natural gas. Here's the 4-hour chart of natural gas. Continues to pull back. We had that first pullback to the first key support level, had a strong bounce off that level. Then we've seen it pull back to another low, a little bit of a bounce, stuck underneath that resistance level. It's come up, hit that level twice yesterday and this morning. We're continuing to see it move lower, and it's starting to look more and more bullish, and I'm starting to get more inclined to like this as putting on a trade here. But just looking at the price action, we've kind of got this falling wedge, depending how you want to draw it, but overall we've got a falling wedge. It's narrowing, and I think we're getting close to a pop in price, which could take it to new highs. And if we just go to the daily chart, you get a really good picture of what it looks like. You can see the nice daily chart pullback. We had one back here. You get this kind of falling wedge, gets a little overextended, breaks a couple key levels. It comes down to a first key support level, you get a bounce, and then it breaks and kind of grinds lower, shaking everybody out, and from there you get a strong rally that's similar to what we're getting right now. We're getting this falling wedge. We just had this first key support level just pierced in the last week or so, and if we could get a little bit of a grind a little bit lower, then I think we could get a nice rally off that level. Again, if we just draw a support trend line, you can see kind of where we're going. There is potential for it to slide quite a bit further, right down to the 260 level, but overall I think scaling in and starting a small A long position in natural gas, I think, is a good play. We can add as it comes down to the support level and it becomes more and more oversold. And you can see as price sells down, you'll start to see volume kind of pick up, and then from there, usually when volume picks up and everybody's panicking out, that's when the market reverses and heads to the upside. And that's what we're starting to see now. We're starting to see rising volume. More and more people are starting to rotate out of it and getting shaken out, and that's usually when you start to get these sharp moves higher. So overall, I'm really starting to like natural gas. And another one I like is the bonds play, which I'll cover that in a minute. But let's just take a look at crude oil. Here's the crude oil chart. Crude oil had that nice overall larger bull flag that formed here. Nice move up. It's consolidated. Had that reached a measured move up here. Got a little toppy. It's consolidated. Starting another run. Yesterday I pointed out that we were trading up here at resistance. If it breaks out here, then we could see it continue to work its way up to the 98, 99 level. And yesterday we saw it have another pop in price, another mini bull flag. From here it looks as though it could head right back up to around the 96.50 level. This is a nice little bullish pattern, and we'll just see how that unfolds going forward. Overall, just going to the daily chart. Well, here's the weekly chart. You can kind of see the range here of where we are. If we were to just draw a resistance trend line, there is potential for it to scream all the way up to the 105 level. Of course, as time carries on, that level becomes lower. We are going to see key resistance around the 100. It is a whole number, century number, and there's naturally going to be sellers there. And you can see there's a lot of consolidation. There's a little consolidation here, pivot high, pivot high, pivot high, pivot high. Started to trade through that level, and then finally we had a breakdown from that level. So that level here at the 100-ish area is going to become pretty key resistance. So either way, if it gets up there, likely this move will start to have some type of pullback or start to chop sideways, something similar to what you see over here at that level. It just becomes uncertain and becomes more unstable. Looking at precious metals, here's a 4-hour chart of precious metals. We got this key resistance level we've hit repeated times going back. You can see how many times we've touched it. Strong selling has come in every time. We are getting some rising bottoms heading up this level, which just shows there's more and more people accumulating gold. As it dips down, they're accumulating, and eventually it does put more and more pressure on this resistance level. And if it does break out to the upside, then we could see a nice move, which is kind of what we're waiting for. But overall, if we break this support trend line, this rising support trend line is going to trigger an extremely sharp sell-off in precious metals, simply because it provides all these pivot lows where there's going to be stop orders placed. And if you take all these pivot lows and just draw them right across to the hard right edge, you can see they're not all that far away. And once price starts to drop, we know how precious metals pretty much take the staircase up and the elevator straight back down. Once it starts to break these levels, you'll see stop orders triggered, and because they're nice and close to each other, you'll see price more or less drop fairly sharply, might get some type of bounce, and then as it starts breaking these levels, you see very strong selling kick in, and it could come back into a possible little bit of a bottom here down the 1500 1530 area. So got to be very cautious. It is a nice rising pattern here, squeezing pressure on this upper resistance line, but we've yet to break it. And gold miners, they had a big up day yesterday, but overall they still have yet to break any key really resistance levels, which I'll show you in just a moment here. Looking at the gold miners, you can see the gold miners here yesterday, a big pop in price, and we haven't really made a new high on these back here yet. This is kind of the key level. We have had a couple minor new highs and higher lows here, but overall we haven't really broken a previous pivot high, and we're just still coming up into that area. We do have some down trend lines here. We've got the 200-day moving average, which is still way up there, but overall we are still seeing this rising kind of price in gold miners. We're working our way up into resistance here, and they haven't really broken out yet. They have made a higher low over here, but they haven't even broken the first real pivot high over here. And of course, this is the main the main pivot high when there'll be a real breakout, and we'll of course also break this red trend line up here, and that's when we'll see a real, I think, trend reversal and shift, and possibly the start of a major trend up for gold miners. Looking at silver, silver is much the same as gold. Got this key resistance level. There's a couple different ones on silver. This is the first one. Again, we've got the rising bottoms across here, so it's slowly working its way up. People are accumulating. Again, it's going to trigger all these stops if we do see price start to fall, and silver goes down very quickly. We could see it easily come right back down to the 26 level, but overall it's trying to break out here. If it breaks out here, then it's going to be hitting the brakes somewhere around the 29.50 or 30 area, where it might spike up to and consolidate for a bit. But more or less, think of the market as a more or less a hotel room or hotel. You've got floors and ceilings, so once it breaks through this ceiling, it's naturally going to fly up, hit the next ceiling, and then it'll probably come down and touch the floor again and consolidate somewhere within this range before it'll have the energy to bust through the next ceiling and shoot up to the next resistance level. Looking at bonds, I'm starting to really like the bond chart for a long play. This is the 4-hour chart here, and we can see we've just been picking up speed to the downside. We've seen a huge drop in the price of bonds. We've seen yields jump about 35% or so in only a month, which is a huge jump for long-term investments. Overall, we're looking a little long in the teeth here. It looks a little oversold. Got this blue support trend line with this previous pivot low, and you can see we've pierced that level and really kind of shaking the market out. We've seen elevated volume the last couple of days, showing that the majority of people are starting to panic and get out of their play. If we just go to the daily chart, looking at the daily chart, you can see a nice clean pattern here, and volume's picking up, meaning that everybody's panicking out, and we've broken, of course, this support level, which shakes the traders out. I do feel as though we're ripe for a little bounce. I'm not saying we're going to get a huge bounce. This market, the way it's been going in the last year, is really, you can pinpoint almost the pivots and the moves, but you only get a 1 or 2 or 3 day move, and then it reverses and continues going in that direction due to news or whatever it is. But it seems that there really isn't much follow through on a lot of moves. You get a 2 or 3 day bounce, and that's about it. So I'm looking at the TLT ETF to go long. Could see a 2% bounce in bonds, maybe even a little bit higher. I guess the TBT is a double leverage, so it'd be about a 4% move possibly that could happen in 1 or 2 days. Now if I just pull up the TLT, you can see here I got the 200-day moving average. We are coming down just to that level. Generally on a key moving average like that, when you come down and tag it for the first time, usually you'll see some type of bounce off it, and that's kind of what we're looking for. So we may be looking to start to accumulate, get in a little bit of TLT and possibly UNG, the natural gas fund, for a bounce, and we'll likely be trimming some small profits quickly on any type of bounce, just because this market has been a little bit crazy, and really we're not getting much follow through on a lot of moves. So we want to quickly pull some money off the table, move our stops to break even or better, and see if we can get some follow through with a much larger move in both of those commodities. Looking at the SP 500, here's the SP 500 futures. Actually, let me just pull up the daily chart first. Okay, here we go. Here's the daily chart, and you can see here what I kind of want to show here is we've had this kind of running, we've had a nice little range here, and now it's starting to get overextended. We've kind of left that range, and we're just starting to run up and grind higher. We've broken these. This is the futures chart, and we pierced the all-time high in 2012, and it's triggered some short covering and some buying, which I'll show you on the intraday chart in a minute, which is really what stretched the market up yesterday. But overall, what I want to show here are these the short-term cycles. The yellow line here, we're seeing a rise in the lows, and we're starting to really see them. Each pivot low here is higher and higher, so the market's getting squeezed up. Same with this pink line, the intermediate trend. It's getting way up here, and usually they can trade up here for quite some time, for a couple weeks. And overall, Eventually it will start to roll over and we'll see a sharp correction. And the key thing here, what we're looking for is this yellow line to start to make some new lows while price is either going up or sideways, and that means that the cycles are starting to reverse and start to move back down. So we want to see these spike lows in the yellow cycles start to make lower lows, so we get some divergence. Again, we're trading up at resistance. If we can start to see this yellow line start to move down, and same with the small blue line, then we're going to start to see some divergence and some choppiness in the market, which should lead to a pullback. Now looking at the intraday chart, here's the last 6 trading sessions for the SP 500 futures, this 24-hour chart. Yesterday we had a little bit of a sell-off in the morning, not even a sell-off, just a pullback, and really from there we got some strong buying. Market surged higher. These blue lines here are different key pivot highs, and each time we hit that level we had a surge of volume which took it to the next resistance level. And then from there we had another breakout and an ultimate breakout here, causing another spike, and it really ran all the stops, breaking to new 2012 highs on the futures market. Since then we've just seen it cool right down. It's been flagging overnight. This is actually a nice bullish pattern for continued squeeze higher in equities. I wouldn't be surprised if we see it continue to move up today. Now just looking back, if we just zoom way back on this chart, you'll be able to see where these pivot highs are. Here are the key pivot highs, which this first blue line, it's hard to see, they're all scrunched together here. I can just pull them down a bit. What you want to see here is we had the first pivot high broken yesterday from just a couple days ago, and then we had another pivot high broken and an all-time high, and those caused an intraday spike in price. So if we just go and look at the intraday price action and zoom right into yesterday, let me just kind of show you just so you can see how the levels are broken. Once you break this resistance level here, you'll notice that there is a surge in volume. Those were the stops being run. Anybody who is short covering their short positions, and anyone who wants to buy on the breakout of the high, that's them piling in. And then eventually we saw it start to move up, and this was the key. This was the all-time high here. You can see as soon as it popped to that new high, you can see this great big spike in volume. That was a bunch of stops being run. There's almost 60,000 futures contracts that went off in that 10-minute time frame, really kind of shaking the market out, and from there it pretty much topped out and has been flagging sideways ever since. So overall the pattern is still bullish, but it just goes to show when you draw on those key levels and you see when those levels are broken, you can see when it's running the stops and triggering a lot of orders. Anyways, that's it for now, and I'll talk to you in a little bit. Bye bye.